Trading with the COT report. Hi, it's Charlie giving you Wednesday's video, which is also sponsored by Tickmill. Do check them out in the description box below. So let's have a look at one way that you can use the commitment of traders reports. Now, the commitment of traders reports itself are released on a Friday night, as many of you know, but they only take you up to the positions of the previous Tuesday. So they're already, when they come out on a Friday evening, they're already sort of 2 days or so out of date because they go up to Tuesday's close as far as positions are concerned. So the COT reports are showing us what the large speculators, hedge funds and the likes are doing with regards to their positioning. So what we're going to look at today is just one example of how we can use COT data to help us in determining market direction. And the first thing I must mention with COT reports, COT data, is that although these are the big players and the pros, they are not always right. Sometimes they are wrong as well. And when we see them collectively at extremes, then there's usually the good thing is when they collectively get to an extreme in their positioning, it's not necessarily that they're always wrong, but once the technicals then align to go the opposite way, we know that they're going to have to then massively change their positioning. And when they massively change their positioning, that can evoke a big move in the market. Okay. So you shouldn't always look at it and think, oh, well, they're the pros, they must be right, because that's not always the case. They are good at getting into trends and they'll stay with trends. But at the turns, they quite often get caught. So let's go and look at an example of that. Now, what was really interesting this year with the S&P, if we're looking at, this is 2023 here, what I'm going to do is just put a line across my chart roughly. Here we go through here. So we can see that coming into 2023, the S&P had made several attempts, one here, over here, over here, and then all through this cluster here. It was attempting to break out to the upside. Now I'm recording this in the middle of August 2023, so it doesn't matter what's happening now or what happens, post here. What we're interested in is when the S&P was in the early stage of this breakout. Okay, so what we wanted to do, what's interesting here is that the S&P kept on coming up to this level here around the 4150 zone, 4150, before it then took off. And so I often look at this as, if we get multiple tests of a level, then at some point it's going to try and break out and go. Okay, it's the way I tend to look at that. So what was going on at this point through here, so we're looking at sort of April, May time of 2023, what was going on here, because the chart was looking quite bullish if we got a break. So if we got a breakout, then the chart was looking quite interesting. So what we need to look at is what was the COT positioning of those large speculators at that time. Okay, so let's now go over to the COT report. So I'm using tradingstir.com. So you'll see that's the URL here, tradingstir.com/COT. Okay, so hopefully I've still got that correct there. I've got this, of course, I've got this crunched up for you. So what you do is you come down and you've got currencies, grains, you name it, metals. We're looking at this, of course, we're looking at the stock index, and I'm looking at the E-mini stock index here. So I'm going to use the COT legacy. It's a much simpler report where it just groups the commercials and the non-commercials together. So the commercials are essentially the institutions that the large speculators are dealing with. So if they want to buy an S&P contract, then they've got to obviously buy it through an institution, and so those are the non-commercials, the large institutions who are selling to the commercials who are, sorry, other way around. The commercials are the large institutions who are selling to the non-commercials who are your likes of your hedge funds and stuff. So think of non-commercials, hedge funds, large speculators, big players in the market, and then your commercials are who they're having to buy or sell from. Okay, so so we can see that in this past week that I'm looking at, we can see that actually the large speculators have reduced their short exposure by 35,000 contracts, quite a lot, and they've increased their long exposure. So they've actually, in this past week, taken a lot of their shorts off the table and are adding to longs. Now, we have to put that into some form of context, so let's take this down. So what I like to do is come down to the chart itself. I'm going to have to move this across a little bit this way. There we go. So this is the main chart that I'm interested on here. Now, the chart has the commercial positions, net positions here, the non-commercial and non-reportables, which are generally just smaller positions. We have no interest in those. So if you just click on the non-reportables, it takes it off. And of course, I don't actually need the commercials because the commercials is just the opposite. You can see it on here. It's just the opposite of what the non-commercials are doing. As the hedge funds are buying, the institutions are having to sell to them because they are the market makers for them. They're making the market for, I say making the market for them, but they are where they're interacting through. So they're literally just going to be the opposite. So we'll take those off. So all we're really interested in is what those hedge funds, large speculators are doing. Okay. And then down the bottom here, we've got it's zoomed in to 1 year worth of data at the moment. So we can see that jump in this past week. There's a jump because the number of long positions has been increased and the number of short positions has decreased. But like I've already said, we have to put that into some form of context. So if I come out to a 2-year chart, you can see that, okay, overall, here's the net zero. So we can see that overall, they are still overall net short because we're below zero. So that's all long positions and all short positions combined, they are still net short the stock market at the moment. So you can see that they're sort of playing catch up with what the stock market has actually been doing, because the stock market's been going up, into generally speaking, into over this year. So, but we're not interested in what's going on right now anyway. I'm just giving you some information there. What we're talking about is that period, what did I say? April of May, when the stock market, this is a weekly chart they show up here, when the stock market was getting close to breaking out. So what was the positioning at that point? Well, they were at big net short positions. Okay. So you'd think, well, if they're net short, surely the stock market should go down. And it could have done if the technicals align with what's going on as far as the positions are concerned. But if we go back to the chart, what were the technicals doing at that point? Well, they weren't exactly falling. So we were actually, and then it was around about the 19th of May that we broke up here, did a little pullback and then went. So around mid-May, but we were consolidating all through here. So we come back to the report. So we come into May and we can see their positioning is really low. So they're actually positioned, speculating that the market is going to come down. And we can see that overall, they've just maintained this overall net short bias from 2022. Now, it's fair enough. In 2022, stock markets were coming down, but the stock market's actually bottomed in September, October time of 2022. And they continued to start to add to their positions as the stock market started coming up. Again, where are we at? How are we going to use this information? So what we're really looking at is that, like I keep saying, is this April, May time. And yet down here, there are extremes. So we now need to go out to show you that extreme. If I go to a max here, we can see the last 10 years worth of data. So that we can now see that in the context of their overall positioning, they at that point, they were at their biggest short position than they've been in the last 10 years. So this is how we can use this information. So now we can zoom back. So we now know they're an extreme in positioning. Okay, we've got an extreme in positioning, but we've got an S&P which is building for a breakout. So what does that mean? Well, if you've got an extreme in positioning in their net shorts here, then the capacity, if the stock market starts to break out like it did, then the capacity for them to have to then be forced to do what? Cover their short positions, i.e. buy them back, and therefore create a let's move that back up so we can see that properly there, and therefore create a short covering rally as well that adds fuel to the rally. That's all then in place. So coming back to the COT positioning, this is a great example of this year, and if I take this back to just a year's or maybe 2 years worth of data now, using the COT data in conjunction with the technicals. A lot of the time the COT data will be in alignment with the technicals, but what happened just a few months ago was we had this very special place as far as the positioning was concerned, whereby, wow, we've got this extreme short positioning, but the technicals weren't aligned with it. So therefore, all we need is a little bit of a breakout, and then this big short positioning could mean that they end up having to start covering their shorts and starting to buy. And that's what we can see has been going on since then. So there you go. That's just one way that you can use the COT analysis data, and hopefully you find that useful. There are several ways that you can also use the COT analysis, but that's just one way when you're looking for extremes in the COT analysis data, and then start looking at the technicals in conjunction with those extremes. Because when you do get extremes, the capacity for reversals in the market or breakouts in this example are certainly there.